Our focus for today is something called the December effect. We have a guest host, Wayne Green, who's going to cover this for us, a former investment banker and MBA. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters. If you enjoy the show, please take time to like and subscribe. Today's guest host, Wayne Green, has been asked to come on because we had the primary catalyst of the entry into the S&P driving the stock price. And the question then is, what are we going to see over the short, mid, and long term? And he has what I think are some really good points regarding things we should anticipate heading forward for the stock. At any rate, we look forward to your comments. Please take time to like and subscribe. And we'll now turn it over to our phone conversation with Wayne Green.
It's a tax game that happens every December and January. So that causes fluctuations, and you never know what's going, but it all depends on the individual particular position. That's the key thing. So that could be an explanation for it.
Well, right now, I was just shocked because one of the problems I'm seeing with Tesla is that the stock has gone from maybe 300 at the beginning of the year to now the equivalent of 3,000 at the end of the year. And they are growing fast, so that's not an issue. But I thought that the current status of their price exceeded what was appropriate based on their growth rate. And you know what I'm saying?
Yeah, but remember, you still have a lot of people that are, I would bet the Tesla probably has a higher percentage of individual investors compared to professional investors who look at things from a different point of view. And remember, individual investors will tend to be more management investors, whereas special investors are looking at it from a different point of view. But remember, most professional investors are mutual funds, and they know their clients are, we're buying into a mutual fund that's going to have a portfolio, and they got a portfolio. They're looking at long term. So I don't need to gain 20%. If I gain 7 to 8% consistently year after year, I'm going to have people continuously moving money into my account. And so I got to continuously buy different thing. So you got an issue with cash being thrown in, but that fund that wants to keep certain weight in certain things. I'm not talking about I'm not including the S&P, the S&P index funds. I'm talking about the hold on one second. I'm talking more about the like the Fidelity Magellans and other things where they want to look at it at a certain they want certain companies that actively manage certain stocks in their portfolio because they're trying to get certain allocations. Well, if you got $2 billion under management and you raise another $100 million, well, you got to allocate that $100 million and you're trying to keep certain balances in place. So they're trying to buy other things with cash coming in that way. But then at the same time, the management of taxes. There's so many intricate ways that you're looking at things that it affects them. But there is what that's called the December effect and January effect. And December can either go up or down depending on the stock, depending on what individuals' positions are. January usually sees a bump because January now at the beginning of the year, people are now starting to buy because they sold off their positions in December. So you've got all that going in. And then once again, this year, you've got the other strange issue of with the change with getting rid of Trump and going to Biden. People would think that, Republicans are better for the stock market, but Democrats actually on average are better because they put constraints in place somewhat. Trump just put in all this craziness, but Trump's temper tantrums and unpredictability is what Wall Street hates. Biden, they're looking at, okay, now we've got an adult in the room, so we're expecting stability, and they're pricing in. The other thing where Tesla may be getting a bump, and I'm thinking about this, and tell me what you're saying, is I would not be surprised if, especially depending on what happens in Georgia with the election, with the election, a infrastructure bill in the first six months of the year, and especially the Democrats get the Senate. And with the infrastructure bill, Democrats are pushing for energy reduction. I would expect them to include, as part of the infrastructure bill, to also include more electric charging stations and more other things as part of the overall plan of building infrastructure, because they got to get people. They want to find ways to get people back to jobs and everything else. That bodes well for companies like Tesla, because even though Tesla's models have good range, you saw people out there that are, I don't know, what if I'm going someplace and I don't have a place to charge up? Well, you're going to, and even though Tesla has a network of it, people don't understand it because they haven't looked at Tesla itself. But they hear the government's going to be putting in 1,000, I'm just throwing out a number, 1,000 charging stations to make sure all the interstates that have charging stations to drive us more and more to renewables, to electric cars. That's a boon for Tesla, because that's knocking the one thing that's holding some people back from Tesla. Does that make sense?
Mm-hmm.
So I think the fact that Biden's into already is benefit to that. And even if the Democrats don't take Georgia, they only need to peel off 2 votes from the Republicans, and keep the kooks on the left wing in place. If they can get something through on an infrastructure bill with all the Democrats, they just need to pull 2 Republicans. And I would bet if they put a half-decent infrastructure bill on the table, they're going to pull Romney, they're going to pull Collins, and they're going to pull McCoskey. But all they need is 2 of those 3, and Kamala throws the decisive vote.
Mm.
So, because they got to do something, because, unemployment, Trump's saying unemployment's coming down. But unemployment's coming down because Walmart, what is it? Amazon's hired 250,000 people since March. Well, a lot of those jobs are not making $100,000 a year. A lot of them are low paying. And a lot of these people, I'm there and other people, I'm getting picked out to do other things and I've only gotten a couple of raises there, and they're asking me to do this and this, and I get the manager because they know I've got that mindset. You got a lot of other people that they're going to get nothing more than what the minimum is. So unless there's something for these guys to do, they're still stuck in lower paid jobs, but infrastructure drives higher salaries, and they need to do something that creates higher paying jobs. And infrastructure does that, and it trickles down into other areas.
Mm.
So I would be surprised if they're not doing an infrastructure bill, and I would almost call it political negligence if they don't.
Interesting. I guess I was surprised because the logic you provided of general market in the December time makes sense, but the question mark is trying to determine what the driver is for Tesla, given that the stock pretty much for this week, particularly after Trump didn't complete, Tesla's been rising while everybody else is falling hard. You know what I mean?
Yeah, but once again, Tesla may be moving on momentum. Because remember, it's something that Warren Buffett once said. Warren Buffett would be afraid of Tesla right now based upon his historical mindset is, when everybody else is giddy, I'm scared to death. And when everyone else is scared to death, I'm giddy. So Tesla's got a lot of momentum in that, because people look at it, hey, it grew 5-fold this year, so let me get in. It's going to grow 5-fold next year. Some people have that mistaken thought. Can't keep growing at this unsustainable rate. When people think that, so they throw more and more money at it, and it becomes a self-fulfilling prophecy. But there comes a point when the bubble's going to burst on it. It may or may not.
Mm-hmm.
I mean, Tesla, if Tesla rises next year only 30%, that's a great growth rate. But people are going to be pissed. Like, it grew fivefold last year. Why is it only 30% this year? You got a lot of people that are jumping on the bandwagon. And the thing is, the worst people who jump on the bandwagon don't want to jump on the bandwagon late.
Mm-hmm.
But that's also when they get the most money. And you saw it. You're in Silicon Valley in San Francisco in the 90s, in the late 90s. You saw that happen with tech stocks, right?
Mm-hmm.
That exact thing happened with tech stocks. And then a pin got into the bubble, and they burst. Not everybody burst. Yahoo lost 93% of its value. Others kept growing because, but the growth that they had up until that point was unsustainable, and but the expectation was that Tesla's got some expectations that they just have to keep tempering it to say, the government saying, past performance does not indicate future performance. That's so important for Tesla right now because they grew, what was it, 300% this year or 40% this year? For them to grow 300%. For them to grow 300% next year would be the equivalent of growing 900% this past year. It ain't happening. It's impossible because you're going up a much higher asset base. So you got to look at it from that point of view. But there are people running after it. So it's still growing. The question is, how many they got a lot of that going, and they got all this other stuff. Tesla did the stock split. Then they went for the S&P 500. All these other things happening, and it's all coinciding with end-of-month trading with profit taking. So you have some situations, people are like, they make profits, and they're throwing their profits into Tesla. I don't know, because you really don't see the individual movements of it. But all this stuff, indirectly and directly, are having influence. That's why I think there's so many things that affect them that are really outside of their control, but they're getting a benefit from it. But there may come a point when the stuff is out of their control, they won't get the benefit of it. It has nothing to do with how well or how good or how bad they run the business. They run the business well, but all these external influences right now is great for them. But, nothing lasts forever. That's the only warning I would say. And finding a way to figure out who is doing the buying, that would really help out. Because if you know who's doing the buying, now you can know what's driving the buying.
Interesting. Yeah, my review of the whole thing was that there are some S&P buyers that had to do so in a tight time window, but there was another group that was going to wait to see what happened and then do their buying. And it feels, based on the ability of the stock to move against the market, that those that are buying right now are mandated to do so and are buying in large enough quantities to move the stock up. Right.
But you also look at all those people who they didn't buy Tesla, but once again, they see it up this percentage, they're going to buy it. And that's the only reason they're buying it, is because it's up a huge percentage this year. And that's the percentage going to be next year. And not necessarily critical.
Yeah. So, at any rate, I thought it was really cool. It's nice that it's up, but I have to admit I'm surprised, man, because I thought the S&P anticipation price increase would get taken apart as we went back to looking at the growth fundamentals of the company.
Remember I said that there's so many external issues. It's what's really an external issue, because certain things may be already priced in, but certain other things are not priced in, and that's where the wild card is.
For example, other S&P movement on buys, as well as time of year factors.
Exactly.
Interesting. Well, I appreciate.
I don't think about the tax issue, but until it's tax time, but there's a lot of tax buying and tax selling that goes every single year.
Yeah, that definitely makes sense. Wow. Well, it's been an adventure so far, and we'll see. We'll see what happens. You know, we'll definitely see what happens. I appreciate your reviewing it.